Hey everybody, here's some helpful information. Check this out.
Hi, this is Andrew with Heartland Credit. So you may be working with us and we've worked with you regarding your credit restoration and we've gotten you to the point where your credit score looks viable for the loan officer to pre-approve you. The exciting time of your life, you're getting ready to go back to the banker and sit down with them. They're going to pull your credit and they're going to qualify you hopefully for an approval. Let's talk about a few of the do's and the don'ts in the industry, however, that loan officers get frustrated about. So you walk in, they pull your credit. They're going to pull a tri-merge, a merged report of all three bureaus put together. They're going to throw out the high, they're going to throw out the low, and they're going to underwrite your home mortgage pre-approval loan on the middle of the three scores, okay? They're also going to need to look at your tax returns. They're going to need to look at your W-2s, potentially, pay stubs, and then they're going to begin the process of submitting your loan for an approval. A few of the do's and the don'ts that we want to make sure that you understand. Do's. Do make sure that you're prepared. Do understand that the loan process isn't as easy as it once was. Sometimes an underwriter is going to tell a loan officer that they need more information, maybe a letter of explanation or a bank statement. If you're bringing in cash, they want to see where that cash came from. On your down payment, for example, they like to use a word called source and seasoning, which is basically saying we want to understand where that down payment came from, we want to source it, and we want to be able to see it somewhere. We want to see it in a bank account. We don't like non-documentation anymore in the loan industry. So it's very important that you're prepared. A couple of the don'ts. You don't typically want to apply for new credit right when you're getting the pre-approval. You don't want to increase your credit card balances. I think a general rule of thumb is to tell consumers, once that banker has said you're approved, I tell everybody just don't use your credit cards until your loan is closed. Just take them out of your purse. No, don't close them, okay? I'm not telling you to close them, but you don't want to see instant or increases in usage. The other thing is credit reporting has changed a little bit, and now that loan officers have to deal with something called trending data, which means 2 years ago, it simply showed 30, 60, 90, were you on time and were you not on time? What was your balance versus what was your high limit? Today, they actually look on a monthly schedule to see in what direction you're moving. And you always want to be looking at trying to move yourself into a positive direction for pre-approval, because the more positive you look, the easier the loan can get done and the better the terms are for you. So a couple of the don'ts again is don't go crazy with your credit cards, okay? Pay everything off that you can, and really listen to your loan officer. The other thing is I would not go to 10 or 12 different banks to compete. Most bankers today, there isn't a huge difference between their pricing or products. So it's important to build a relationship with one that you really like and trust them. Let's face it, this is the largest thing you're probably ever going to buy. Let's make sure that you're prepared. Let's make sure that you're following things that are going to make sure the experience goes smoothly, and let's try to avoid some of the pitfalls. Thanks for listening. Hope you have a great day.
Hope you enjoy that information. Again, call us or email us with any questions. My name is Eric Gausepohl for Summit Lending. Have a great week.